Good afternoon, everybody. Good afternoon. Good afternoon. How is everybody doing? I am about to just go live on Facebook as well because I'm an absolute tech wizard and I'm able to stream across multiple platforms. How is everybody doing? Hi, Sammy. Hi, Chris. Great to have you here. And then I'll be flicking between this and also the Facebook group as well to see who's going to join. Remember, guys, we'll give it a few minutes for people to join. If you haven't done so already, you can register for the live raffle that is happening on the 22nd. So today is your last chance to claim a ticket for it. Let me grab the link for you guys now, and then we can send that in. Make sure you register for the event. For all of the lives that you guys have attended, you will get a additional raffle ticket. If you can, please comment on the live Facebook group. I know some people don't have Facebook. That's okay. But for the people that do have Facebook, make sure you put it in the live Facebook group for us. And yeah, you will then be able to tally up the amount of tickets that you've got. Amazing. Hi, Slav. Hi, Steve. Hi, Kevin. Amazing stuff, guys. I love it when people get here on time. Shows that you guys are super committed. And today is an exciting day. It's officially been my last proper trading day. I don't trade over the Christmas period really at all. Christmas time is time for me to shut down and spend it with my family, spend it with my children. I don't worry about trading over that time. Hi, Paul. Hi, Andy. It's also been the last day of our CSI 2.0 intake, so I want to do a special shout out for all the guys that joined on to CSI 2.0. It's been an absolute whirlwind in a good way. And I actually wanted to show you guys a trade setup that we took yesterday, which I quote one of the students, I believe it was Mitch. His exact quote was, "Holy smokes." The trade was that good. So I'm going to show you a breakdown of that, show you the tools that we used, and so on and so forth. Guys, gear up any questions that you've got, any markets that you want me to take a look at, and we can also do a live trade breakdown as well. So yes, hopefully that makes sense. Good to see everybody here. Hi, Chris. Hi, Jeanette. Hi, Dobidas. It should be in the group, Slav. So I've just popped it in there again for you to join. I think that's the right one. Is that the right one? Must be. Gotta be. Yeah, that's the one. If you register on that, guys, that I've just posted in the chat, you have to be on that live event in order to claim your prize. Hi, Toby. Hi, Andy. Hi, Ayaz. All right. So without further ado, let's dive into the markets. So this is a trade I took on the FTSE 100 yesterday, unless it has disappeared. But I'll show you guys where I entered, where I exited, and so on and so forth. Can everybody see my screen okay? Yeah? So let me just quickly get my MetaTrader up, and I will show you the exact entry I got, which was down here. And I entered on the 5 minute. So I got filled at about here. I think it was 9,750 was where I got filled. Let's take a look. History. Last week. 750. Yeah, perfect. So we entered right there. Our stop literally went just below the low, and we had a target, and we hit literally about 12 to 1. Just under a 12 to 1 trade. We made overall about $2,200 on it, which was awesome. But this is what the trade looked like. So on our CSI 2.0 program, which I'm going to give away a little bit of a spoiler, by the way, on Monday, a place on CSI 2.0 will be available on the Raffle. So you will learn exactly how to do this. All right. So myself, the CSI 2.0 student, identified a really, really nice setup on the FTSE 100 where our 50 moving average, which is this green line, was pointing up. So this tells us essentially that we're in buy mode. Okay. On top of that, we had the markets moving in an overall uptrend. We were bouncing off of a really, really nice key level, which is a level of resistance that had turned into support. And to kind of put the cherry on the cake, the market alongside New York Open had taken out all of these previous lows, which is a really, really good initial sign that the market is going to reverse. Okay. We use a special indicator called the market timing indicator. People will already be familiar with it from previous webinars that I've done. But if you're not familiar with it, this is a core staple to how I trade in particular. And it helps me time the market perfectly. And it's basically, in my opinion, the most accurate way to measure and to trade with momentum. All right. So we ended up getting a really nice signal on our market timing indicator around that area. In order to get a really tight stop on it, we used the 15-minute time frame to wait for the market to also give us the same signal. And we also waited for the 5-minute time frame here to also give us the same signal, which is exactly what it did. So when we timed the market perfectly, momentum just instantly kicked in. The way that I managed this trade was I actually took half of my profit at these previous highs right here. Half of my profit I'd taken at these highs, and then the rest of my profit I'd taken before the end of the day, right when we started to see these really large sells start to come into the market. All right. So that's how I managed it. I got in on a nice position. It started running in my direction really quickly, took some of my profit out of the market, mitigated my risk, and then took my full position in an area where I thought this market, is likely to either stop with its momentum, or it's a place that I was comfortable with the amount of risk to reward that I got. There's not many people out there that, can consistently catch, a 12 to 1 trade. But for some reason, with this indicator, with this strategy, what I've developed, it's taken me probably about 5.5, 6 years at this rate to fully release this. For some reason, this thing consistently does that, which is absolutely crazy. So that's the trade that we were showing on the FTSE 100. It is proprietary, yes. It's so unbelievably accurate when you use it in the right way. And for any of the CSI 2.0 guys, they can give it a shout out on how good it actually is. But what I wanted to showcase for you guys is that you don't have to be an absolute expert. You don't need to know absolutely everything in order to make money from trading or in order to be a good trader. You don't need to do that. All right. You just need a consistent system. A consistent approach equals a consistent result. And you can utilize tools, you can utilize indicators to make that system easier. So today, I've shown you a trade breakdown, but one of the main things I get a question on, and one of the main things that confuses people, is how do we identify a trend? I want you guys to put a comment in the chat, wherever you are, StreamYard, Facebook, YouTube. Let me know if you struggle to identify the direction the market is going in. Do you struggle, or have you struggled identifying a trend? Let me know. If my camera was working, I'm putting my hand up right now. I'm saying yes, I've absolutely struggled before. Been there, got the badge. Right? Loads of people here as well. Why do you think that is? Why do you think people struggle to identify direction? Well, it's because mainly of information overload. And a lot of the stuff that you guys have learned for free online, free off YouTube or TikTok, or wherever that you've gotten your education before, a lot of what you're taught is the market makes higher highs and higher lows and all of that. A lot of people trade like the 1 minute time frame and all of that stuff, and it's just not a consistent enough approach. It's too short term. It's too short term thinking. Too much short term thinking. There are so many ways that you can identify a trend. You can identify a trend through trend lines. You can identify a trend through moving averages, through the MACD, through simple price action. If the market is breaking previous highs or previous lows, you can identify a trend through the candlesticks. But the worst part is that you could be, where this is most relevant is when you're trading the likes of Forex, right? Let me tidy all of this up. I'm going to get rid of all of these indicators. Right. The worst thing about identifying a trend when you don't know the know-how or where to look or how to identify it, and when there's thousands of ways that you can identify a trend, you could zoom out and you could look at the weekly time frame and you'll go, whoa, okay. Some people will think that this is an uptrend. So the weekly will be saying, right, okay, we're in an uptrend. Other people will be saying, oh, well, it's broken this trend line, so therefore we're in a range, right? There'll be other people saying that this doesn't matter. All I care about is these candles. This to me here is an uptrend. You got to think, where's like the end of this? Like, there's so many different ways, right? But the thing is that the markets are what we call fractal, meaning that as you go down into different time frames, you will see repeated patterns. You will see repeated chart patterns. You'll see repeated things happening consistently. But what that also means is that on the weekly, you might see a range. On the daily, you might see an uptrend. On the 4 hour, you might see an uptrend. On the 1 hour, you might see consolidation and a range. And then on the likes of the 1 minute, you might end up seeing this downtrend, right? And again, you have to say, like, to what end? How do I figure all of this out? What my system allows me to do is it just gives me a very, very structured way to identify the trend. And I'm going to share that with you today. All right. So when it comes to identifying a trend, it all starts off with the higher time frames. Okay. It all starts off with the higher time frames. If you understand the higher time frames first, you'll get a gauge on direction. We don't care about what happened with price 10 years ago or 10 months ago, right? We care about what's happening with price right now. So when I'm looking at this chart here on the weekly time frame, the market overall, if we just map out some very, very simple support and resistance, we can see that the market has been bouncing between key levels. Now, let me ask you guys this. Now that we've mapped this out, is this a trend or is this a range? Right? What do you guys think? Let me know. So we've got a couple of people saying range. Loads of people saying range. Yeah, well done, guys. Yeah, bang on. It's a range on the weekly, right? What this does is this gives us context. Regardless of how the lower time frames look, we know on the weekly time frame, we are bouncing between essentially these key levels here. So when we go down into our lower time frames, we go in with the expectation that we're going to be bouncing off of here, we're going to be bouncing off of here, and we're going to be bouncing off of here, right? We go in with that expectation. And as you can see this week, that's exactly what's happened. This is Friday. It could close like this today. It would be great if it does. Right? But this tells us our context and our direction. This is some secret sauce because when you understand where the turning points are on the higher time frames, those are where trends start. Think about it like that. If you can spot a turning point, excuse me, if you can spot a turning point on a higher time frame, that is where the trend is likely to change. Who's heard of this? I know we're going a little bit all over the place, but who's heard of this? Who's heard of the trend is your friend until the end? Who's heard of that? Right? Yeah. It's a really, really key thing to understand. If you trade with the trend, it's naturally going to be higher probability, but it becomes significantly lower probability when you're coming towards the end of the trend. Now, this is how a lot of retail traders think. They think, oh, in this circumstance here, right? They would have seen that the market is trending, right? And they would have thought, wow, this market is trending up here. And they would have spotted this trend here, not down here. They would have spotted it here, because the way that we're taught is a trend is something that makes higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So when it makes like 3 higher highs or higher lows or whatever, that's when people start to become interested. And that's where people start to get in on trades that actually are really low probability, because you are spotting the trend after it's happened. The move has already happened. You need to be able, or try and develop a system that allows you to pick out these turning points. Because on the lower time frames, these are where trends are. And that's when they start. If you can develop something where you're able to get in early on a trend, you'll make good money. Don't be that guy, or don't be that girl, don't be that person that gets in on a trend right at the end of it, before the move, after the move has even happened. So this is how I'm looking at euro dollar right now. I'm thinking, right, well, we're in a range and we're at a turning point. Okay. This to me looks like we potentially now have room for down movement. This could be the start of a new trend down. All right. Does that make sense, everybody? So, Paul, you mentioned here you need to predict the turning point. I'd actually argue against that. You don't need to predict anything. You just need to be aware as to where these turning points might happen. We can't control the markets. We have no impact on how the markets move. That's just a reality, right? But we can put the work in and we can map out these areas of interest, these areas where the market could start to shift. When the market hits these areas, you can wait for the market to show you signs that we're actually going to start moving in the opposite direction. And that's what I'm going to show you on euro dollar right now, right? So we're at a turning point. The market looks like it's starting to shift. Let's go down into our daily time frame and let's take a more in-depth look at what is happening on euro dollar, right? I'm just gonna grab a coffee quick. One sec. All right. This is where you can use more in-depth tools, right? What I like to use is moving averages. So you know this bottom here, we could have actually predicted or been able to take advantage of the trend that formed from that bottom by just a simple moving average crossover. And we could have looked to have traded that trend right there, right? You don't have, this is an 8 and a 21 exponential moving average, by the way. You could use what we call a simple moving average. This is my preferred way of trading. Just a simple 50 moving average. You can use this tool. It's called CLRDMA. Change it to an SMA and a 50. You can use an EMA if you want. Basically, it turns green when it slopes up, turns red when it slopes down. It's free on TradingView. All right. But this gives us an idea as to where we are in the trend. All right. If you wanted to use an EMA, these are faster. So you can see that it actually gave us the signal earlier. All right. But I like to use an SMA. So what's this telling us? This is telling us, okay, well, we're at a turning point on the weekly. Remember that. It's really important that we remember that. However, the market is showing us an indication that the 50 moving average is sloping up. This could be the market maybe wanting to move higher, potentially, right? But we are at this turning point. This could be the start of a new trend down. We are always taking into consideration the higher time frame. Let's move into the 4 hour, because look, we can put in all these additional tools. You know, we can use our Fibonacci, which is, in my opinion, absolutely excellent. This just puts in an extra layer of being able to predict turning points in the market. And right up there was a turning point in the market, and we are on the move to moving down, right? We are moving down as we speak. But we can look for even more signs. We can look into the 4 hour. And you can go, right, okay. Go to the 4 hour time frame. And go, right. We've drawn in some trend lines. All of this period using a 50 simple moving average. All of this period was a buy. That's how you trade with the trend. Just a simple 50 moving average. That is it. If it's sloping up, we're in buy mode. If we're sloping down, we're in sell mode. For this whole period, we've been sloping up on the 4 hour. Therefore, we should have been looking for buys. Until, remember, we're at this turning point on the weekly. But we've also had signs showing us that this trend could change or could come to an end. And we see that when the market starts to break its structure, when it starts to break previous lows, where it starts to break inner trend lines. When you see the market start to do that in an area of interest, it's an opportunity for us to then get in early on a trend down. And that's where you can start going, right, well, this market could start going down now. Look at this. On the likes of the 1 hour time frame, you're now getting those signals with the 50 moving average that we are starting to move down. So all of these here could have been sell opportunities. Sell opportunities, sell opportunities, sell opportunities. And the likelihood is that euro dollar still has room for some down movement. It's a really simple way to identify the trend by using simple price action analysis, support and resistance, some turning points in the market, alongside a 50 moving average that helps us identify what we call, one, the trend, and two, our market structure. We're waiting for the moving average to start sloping up for buys and start sloping down for sells, but we're going in the direction of what we're seeing on the higher time frame. All right. Does that make sense, guys? Do people understand that? I teach this really in depth on the CSI 2.0 program, like really in depth. That's a basic overview on what you can do just to simply identify a trend. I personally like a simple moving average, but Andy likes to use an exponential moving average because it's a lot quicker, right? It's a lot quicker. It's a lot more reactive, which is totally fine, by the way. I know some people that don't use a 50 EMA at all. They use like a 20 and they use like a 20 SMA and they use that for their trend. But obviously the shorter the time, the period of your moving average, the shorter term trade you're trying to catch. I personally really like the 50 because what the 50 does is it's kind of bang in the middle where your moving average, what your moving averages measure. What this moving average does is it captures the medium term trend. And when you can understand the turning points on your higher time frames alongside what your moving averages are doing across your lower time frames, you can then look to get in on a trade early and get in on a trend early. Okay. And that's exactly, to kind of revert back, that's exactly what we did on the UK 100. See here, the market changed from a potential downtrend and it changed into an aggressive uptrend. And it was aggressive. Look at that move. Well, my job as a trader is to trade in the direction of said trend. And lo and behold, the market came up. The trend is your friend until the end. The trend is your friend when you get in early. The trend is your friend when you get in early. Look at these sorts of trades. You can see this happen consistently, by the way, you know, and these will be quicker when you use an exponential moving average rather than a simple. But here's a really good one here. Look, the 1 hour time frame on the FTSE. Can you see how the market changes from a downtrend? It then goes flat and then starts to point up. Bang. You get in early on that trend. And now the trend is your friend. When you start getting to, you know, up here and up here and up here, the trend is no longer your friend because you're not getting in early on that trade anymore. You then wait for the trend to change. Which here, look, moving average starts to move down. We get a pullback, bang. We get another pullback, bang, right? Look here, the market changes. This time we don't really get the craziest pullback. But look, if you found a way to get in early here, you would have captured all of that move. And down here, we get a slight pullback, bang, slight pullback, bang. And as soon as the longer the trend goes on, the more likely it is to change. Look, you could have gotten in early on this one as well. Look, start sloping up, pull back, buys. Start sloping down, pull back, sells, pull back, sells. Start sloping up, pull back. Look, it's still sloping up, buys. Pull back, buys. All right. So hopefully that shows you a way for you to simply identify a trend. And it's pretty simple. It's just a moving average when you think about it, right? Understanding where we are on the higher time frames and a moving average. And I will teach this a lot more in detail on what we call the CSI 2.0 program, which will be a free raffle prize on Monday. But you've got to be there. I am going to teach you with it. You've got to be there to win it, right? Who's found that valuable? Who's found that useful? Am I making sense, or am I speaking complete gobbledygook? Yeah. Amazing. Makes complete sense. Amazing. Are there any markets that you guys are interested in? Anything that you're trading right now? Personally, I think today is, I think it might have been either Michael or Mark from one of my previous students. They said to me this morning, today seems like the best position is no position. And I completely agree. I don't think there's many opportunities necessarily today. But there will be opportunities in the future. So we can analyze those markets to get an idea as to where they're more likely going to go. So what markets are you guys looking at the moment? Jeremy, you're saying USD CAD. We can take a look at USD CAD. Let's take a look. Okay. Looking at the weekly time frame here. Let's do some analysis. So we've got a nice level, 1.37. Got a nice level at 1.39. You see that level at 1.39 really quite reactive, keeps bouncing off of it. So 1.39 looks like a nice level there. There might be one in between 1.38. Try that one. 1.38 can be reactive, but it's just not as good. We are bouncing off of it, but it's not as good. We've got some key levels in here. We have had an aggressive drop off on USD CAD, an aggressive drop off. And we can do some basic price action analysis like this to see, like where we are in terms of the trend. We might be able to get something a little bit better than that, to be fair. We'll still put that in. So it looks like it's actually broken that there. Could be a bit of a fake break. Yeah, that could be a bit of a fake break, to be fair. And then we've got quite a nice level at 1.3750. So we're going to go down into our daily time frame. And our daily time frame, we're going to map out those levels again. So we've got this one, this one, this one, and this one. Copy and paste. And now we're looking at the market in a lot more detail. So the trend is down, exponential moving averages, also showing us that this trend has been down, but we are in an area of interest. Let's put our down Fibonacci on. So change this to down. And we have hit a D point. So this is showing us here that we, let me change that tool, have a very, very high probability of at some point moving up to 1.3839. That's more of a short-term view. 1.3839. I think this market could go as high as 1.39 and close back within this sort of upwards channel that we're experiencing, right? So I'd be looking more so for something like this. Because this is a potential turning point in the dollar. However, this market could do that. This market could do this. This market could do that. Let me share something with you. I'm not in this game to predict what's going to happen. I'm in this game to trade probability. You cannot trade probability trying to guess and trying to predict. The probability is saying to me that we have room for movement from here to here. Whatever happens there, I need to figure out. We'll cross that bridge when we come to it, because as traders, we trade what we see, right? But what I'm seeing at the moment is that this market has room for movement up to there. So now I'll go into the likes of the 4 hour, and I'll start to see if there's any changes. Have we seen any form or any sign that this market is looking to trade up? Well, we've got this downtrend that we've seen, right? Isn't that interesting? There's actually 3 things here that are interesting to me about this market turning up. Can anybody tell me what those 3 things are? One of them's already on your screen. Can anybody name those 3 things that I'm looking at that are showing me this is potentially reversing? So Dovidas, you say it's above the trend line. Yeah, so it's broken its trend line. That's one. I don't care about where price is in relation to the simple moving average. I only care about the slope. So that's not a reason in my eyes, but it can be in somebody else's. You can use that as a reason. I personally don't, because the moving average is still sloping down. But what can we see? What else is there? So one, we've got a trend line break. Right? What else? So no, not a 50 SMA crossover, but we have seen a break of structure. Exactly, guys. Well done. Can you see how this market was moving down, moving down, moving down? It was making lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. But can you see here, for the first time in a while, we've actually gone and broken above that level. The market's gone higher. And also, can you see that the market has then gone on and failed to make a new low? Think of it like this. The market was being pushed down. It was being pushed down aggressively. All of a sudden, the market has pushed up. It's pushed above where we had our last push down. The sellers have then tried to push it down and failed. We have failed to make a lower low for the first time since the start of November. So bang on, guys. Number 2 is a break of structure. What about number 3? Not necessarily the swept low mark. Steve, big number, 1.38. So, yeah, we are bouncing off of a round number at the moment, but we're bouncing below that. So that's not a reason as to why this is reversing. You know, if this had bounced off of 1.37, you know, then I'd be more interested. But we haven't broken back above 1.38 yet. Pranshu, perfect. We have a reversal pattern. Let's see if I haven't used this pattern for a long time. Can you see we have a reversal pattern right here? We have one, Let me sort that out there. Kind of like that. What I prefer to do is I like to go, this is the neckline. That's why I don't really like using that tool. I thought I'd try and be fancy, but I don't like it. That's the neckline right there. You can see that that is where the market has been reacting, right? The market has created this inverse head and shoulders. And we have since broken that neckline, and we are currently retesting it. How interesting is that? So we're getting signs. We're getting signs. So number 3 here is a reversal pattern. All right. Moving into the 1 hour time frame. Well, our trend has changed. Our trend is sloping up. Let's see if we can find an entry. We're caring about buys more so. What about the 15-minute? There's a little potential scalp here for a buy from here up to here. What we haven't done is what you can do is you can measure from here to here. You can go right. That right there is the height of the head and shoulders pattern. When the market reverses, it likes to move at least about 80% of that pattern. So here, we quite easily can have a move up to in and around this sort of area. That's a really nice little target. So I would note that level down, even if it's like 1.3825, just to be a bit more conservative, right? 1.3825 is a really nice little target. Wow. Funnily enough, it sits right on one of our fib levels, which is key for a reversal trade. I think USD CAD has a very high probability that we are going to be moving up into that area. It's then just a case of having something to execute that. What I would like to see is actually for this market to come up, then come down, and then go, so I can get a bit of a better price. That's how I would trade it. So what I would do is I would expect the fib to come into there. I would like the market to then come down into this sort of area. And do that. Look for the buys here. So we need the market to go up, come down, and then look for those buys on the 1 hour time frame. All right. I don't think there's anything mind-blowing there, is there? Relatively simple. Found a turning point. And I rarely trade USD CAD. It's just not one of the pairs I really trade. But straight away, just by understanding what the higher time frame is doing, by using a tool to help us identify when the trend is changing and some simple price action, we have potentially a really nice reversal on our hands that's playing out as we speak. All right. The real question is, Jeremy, what were you thinking? Were you thinking to buy or to sell? Either is fine, by the way. We can have differing opinions, and we can both still make money. That's the blessing with trading, shall we say? All right, guys. Don't get me started on data releases. Look, I urge you to refer back to one of yesterday's lives in the Facebook group. Andy and I went through in detail how data releases don't affect your short-term trading as much as you think. Focus more on the technicals. It's good to have an understanding of where the fundamentals are and what data is coming out, and when that data is compared to where you are in your trade. But don't base your decisions based off of data releases. It's very inconsistent, and it's very hard to consistently make money off, Jeremy. You're going to be much better off putting, 80% of your time and energy into understanding the technicals, and then just simply being aware of data releases that are coming out. So, a trade that I took earlier in the week, an absolutely amazing short on GBP USD. I made about $3,000 on it. I was aware that it was a non-farm payroll day, and actually it allowed me to make much more money. Yesterday, I was aware that there was CPI for the dollar. I was aware that there were monetary policy statements coming out for the pound. It didn't necessarily make my decision as to if I should trade it or not, or where I should take the trade. I was aware of it, which helped me manage the trade, if that makes sense. All right. So, guys, I really hope that you found that valuable. Today is the last day to claim your raffle ticket. It's the last day to claim your raffle ticket. If you have not registered already, register. I'm going to put it into the group here, and I'm going to put it into our Facebook group. Register, register, register. Turn up Monday the 22nd, 12 o'clock. If you're there and your name gets drawn in the raffle, you will get loads of different prizes. As a teaser, one of them is an exclusive place on the CSI 2.0 course, where I teach a lot of this in detail. I really don't hold back. Loads of live trading rooms, stuff like that. We have tools, we have other programs that we will be raffling off. So it'll be really cool to see you guys there. And Andy did say that he'll be dressing up as Santa. All right. So if you haven't done so already, guys, register for that event. Put raffle in the comments. If you haven't done so already. If you have, great. If you haven't, put raffle in, and then that allows you to claim an extra ticket. Amazing stuff, guys. Some of you have turned up consistently for every single one. So you guys naturally have more tickets than anybody else. But have a fantastic weekend, guys. We will see you Monday for the free gift giveaway. All right. And we'll see you there. But thank you for coming. Have a fantastic day, everybody. And we'll speak soon. Take care.